Hey guys, Spencer Coffman here with the Internet Hustler YouTube channel. Today we're talking about how to protect your assets. Welcome to the Internet Hustler YouTube channel. My name is Spencer Coffman. Today we are talking about great ways that you can protect your assets. So what are we talking about? Well, that means that you can take the money that you have worked so hard for and put it somewhere and make sure that if something happens in your life, like a lawsuit or some type of a claim against you, whether it's from an accident you caused, someone fell on your property, someone's suing you for whatever reason, anything like that, this is some great ways that you can make sure that they cannot get their hands on that money, that you are protecting those assets. So there are a few great ways to do this. Some of them are very, very inexpensive. Others cost a little bit of money to get going, so you should make sure you have enough money in investments and assets in order to do that. So we're going to go through them in a kind of an order that you should have them. So the first one is to have a Roth IRA. Now, if you don't know what that is, check out a card up here about Roth IRA investing to make sure that you have that. So what is it? Well, very quickly, a Roth IRA is an account, it's an individual retirement account that you can invest in tax-free. And so having that is excellent because that money is locked up. You put it in there and it has to stay there until you're 59 and a half, which means it's not going to be coming out. If you take it out, there's all kinds of penalties and problems and issues. And so generally, that type of an investment account cannot be taken in terms of a lawsuit. So it's also tax-free, which is an excellent way to do it. One of the caveats with that is at this point in time you can only put in about $6,000 a year. So it's not something that you're going to be socking away a ton of money in. So it's one tool in your toolkit that you can use to protect your assets. So Roth IRA. Another thing is life insurance. Having a type of customized whole life insurance is a great way to protect your assets. If you want to learn a little bit more about life insurance, check out this card up here to learn about life insurance investing and then how you can get it and make sure you have the right one. But you'll need a certain type of custom whole life policy. That is one that you put money into every month. It pays the premium and it's an investment. And then that investment grows tax favored, sheltered, free, etc. And that cannot be taken in terms of a lawsuit. It is protected. So that's a great way. Another thing that you can do is what is called a health savings account. And now this is something that you can get through your health insurance provider. Sometimes it's your employer. You have to have a high deductible health insurance plan. We'll talk about all of this in another video about health savings accounts. So that's something that you'll definitely want to check out in a card up here. But basically a health savings account is another account that you can have that you'll put money into all the time and then it stays in this account. You cannot take this money out unless you have a qualifying health expense. In addition, this money grows tax-free, and so it's an investment. You can put it into an investment account and you can earn a great interest rate, usually like 10%. And so it grows tax-free, and then you can use that for health expenses. Now, if like for my age, I'm in my 20s, putting that money in there every month, I'm not going to use that money right now because I know that when I turn like 80, I'm going to need some extra help. I might have a lot more health expenses. If I live to be 109, then those last 20 years of my life are going to get pretty expensive. And so why not have this money here growing and growing and growing that I can then draw from later? So if I want to buy something today like cough syrup, or if I need a prescription filled, sure, that's a qualifying expense. I could use that money, but why would I rob myself of all of that compounded tax-free interest? I'll just pay the $20 to get my prescription or the $10 at the store to buy a bottle of Robitussin and pay that out of pocket now and let my health savings account grow, because that's also something that cannot be touched or taken in terms of a lawsuit. So it's a great way to protect your assets. So make sure you're funding that fully. Sometimes they have limits as well. Usually you can put in It depends. It depends on the plan. So fund that. If you have money coming in, fund your IRA, your Roth IRA to the full limit. Fund your health insurance or your life insurance plan to the limit, because usually there's a cap on what you can put in there every year. And fund your health savings account. That would be number 3 to the max. If you still have money after that, then another great way to protect your assets would be something called an irrevocable asset protection trust. We have a video here about those. It's a card that you can check out about an irrevocable asset protection trust. Now this is done separate from those others. It is something that you can take your brokerage accounts and put it into this trust. So things like stock exchanges, mutual funds, places like Robinhood, Webull, all your cryptocurrency exchanges, Nexo, KuCoin, Coinbase, all of that. You can take all of those, and rather than having them be under your name, you have them be under the name of this trust, and then that would mean that you legally do not own those assets. They are owned by this trust, and if someone comes after you, they cannot get what's in this trust, and they cannot get what's in these other accounts, the health savings, the retirement accounts, the Roth IRA and the life insurance. They can't get that. And so generally, you would only do this irrevocable asset protection trust when you have brokerage accounts totaling a good amount, is about $150,000 or more, because there is going to be some cost to set that up. Generally, at this point in time, at the recording of this video, about $1,500 to set it up. You also need to maintain a bank account with about $1,500. You'll have to file a tax return, and you have to pay a maintenance fee every year to keep it going. So about another $500 or so per year to maintain that. So that's why it's a good idea to have that value. So fund the others first, because that's free. Fund them. Once you're hitting the max on them every year and you have more money, start investing in other investments, stocks, bonds, crypto, within the brokerage accounts, ETFs, things like that. And then when that value reaches about $150,000, then get this irrevocable asset protection trust. That way, everything that you have is going to be protected. You're going to have it sheltered. It's going to be away from everything. Another good thing you can do is purchase an umbrella policy on your insurance. You can get this through your auto insurance provider or your home insurance provider. So personal lines, you can get an umbrella policy, which you can choose the dollar amount. Usually it's like $1 million is the standard. And what that means is that it's over and above your current liability limits on your auto policy, which if you have assets to protect, you should make sure that they're at least $500,000. We'll have another video on insurance, like auto insurance and home insurance policies for protecting yourself on good limits. So make sure to check that out in a card up here. But what you do is make sure that those are max at like a $500,000, and then have an umbrella policy. The more you're worth, the higher that should be. So 1 million, 2 million, etc. And then on your home policy, make sure that's liability is at least at $300,000 or $500,000 of liability there. And then that umbrella would kick in if it goes over and above that. Attorneys that sue you are going to go after whatever money you have. So if you have those policies, they're going to say, well, we know he's got $500,000 in liability plus $1 million in an umbrella, so we're going to hit him for $1.5 million and take it all. And if everything else you have is in life insurance, is in the Roth IRA, is in health savings, and is in an irrevocable asset protection trust, they can't touch it. So they'll take what they can, but they won't get everything else. So make sure you have all that set up when you start accumulating some wealth. That way, number one, your money will be working for you in all those investments. And number two is that you'll be able to keep that hard-earned money. So if you have any questions, please comment below. I am here to help you. I really want to help with your financial education, everything like that. All of this content that we're creating here, that I'm creating for you, I'm doing it for free. So if you want to support me, donate, buy me an espresso or something like that, you can do that. The links are in the description below. I'd love it. In addition, share this video with your friends and your family, because helping them get their finances in order and getting a great financial education is one of the best gifts you can give them, and this content is free. So share it with them, hit the like button, hit the subscribe button, and the bell icon to be notified for future videos. Till next time.